Hello everyone, good morning from here. How are you guys doing? This video will be an update on the previous video I posted concerning Bitcoin and preparation for 2026. And right here we can actually see what Bitcoin is doing. And if you watch the previous video, I made mention that Bitcoin is still bullish, and what we are just experiencing from the month of September is just a pullback to an area of discount. And I labored two major points. The first thing that I labored was this 12-month demand zone. But I also made mention that for price to get to that demand zone, we have to see it violate these swing points, which are strong areas right there. And I made mention that this drawdown that we are seeing, there is no bearish trend formed. It is just a pullback, because we understand that we are having higher high and higher lows, higher high and higher lows, and we not just expect the market to just keep going high, like keep running upwards without having a pullback to respect an area of discount. Now I made mention that we'll be looking forward to see if this low will be a liquidity that the market will have to take, and my eyes will be on this demand zone. So I made mention that it has to take that low. If this low is to be taken out, I will still expect a reaction from this area, and we see if it's gonna go higher to an area of sell-side inefficiency, surely to draw down and then continue to go higher, because we're having a strong bullish move on Bitcoin. So now looking at this right here, we've already seen that it showed a retail reaction from this demand zone that I also talked about. Remember, I said that I am not looking at the fair value gap that we have right here, but I'm paying attention to this demand zone that was given to us right here, right? Because if we have to label from this one-sided move, we already seen that we have this high, this low, this high, this low, this high, and we're expecting it to come lower to give us a discount, right? And the recent low that we have is this, not this one. This one is at a premium. I explained this on the previous video. So now I'm seeing that we're having a reaction right here. So I'm thinking, will this be something that it will use to go higher without coming down to this other major demand that I have eyes on? All right, so now that we trade into it, we have a little reaction. So the next thing that we need to pay attention to is to see when it starts to shift to a bullish trend to realign with the higher time frame. Because if the higher time frame shows you bullish and the lower time frame shows you bearish, it is not yet aligned, right? The two has to be aligned. So the lower time frame needs to align with that of the higher time frame, and in order for the lower time frame to align with that of the higher time frame, we need to see it show a structural shift. So once that structural shift is being given, then that is when we are saying, all right, we are now aligned with that of the higher time frame. So price traded into the discount level. We saw this swing point that was given right here. We have this high, we have this low, and today we saw this impulse right here. Now this should not get you confused to just jump right into the market. As a patient trader, you need to wait for a confirmation. Now what are the things that I always look at to be sure that I'm safe is me looking at this high. All right, so this will be the daily range that I'm having. All right, we'll be dealing with this range. So let me just take this rectangle tool off so that we can see it very clean and clear. So we are now inside this range. These are the buy stop and the sell stop. These are where things that we need to look into that we're focusing on. All right, so since I see that we have this pull upwards, we trade lower, and what comes into mind is that we want to see break this low to see if it continues going lower, but we have that failure to do that. All right, and looking at Bitcoin, I can see that there is no clean area of sell-side inefficiency that it has to react from the daily time frame. So what I'm thinking right now is that I'm going to take my Fibonacci, put it on this high and this low. And what I'm trying to look out now is for the premium and the discount. So we are looking at the equilibrium right here. Price should trade out of that equilibrium impulsively and then we will look forward to how it goes into discounts. We have the 70% and also the 79% Fibonacci level, which is at a premium. We have already seen it react from the discounts, right? Like you can actually see it reacting off of the 23 Fibonacci level, right? So let me just put the 2 right here. Alright, so we now trade into the discount of 23 Fibonacci level when we are dealing with this range highs and low. And now what I'm looking forward is to see is trade higher. We are even close to the equilibrium. Trade into premium pricing. Right now, this premium pricing is for it to react lower, because we do know that this is the range high and this is the range low. This is external high, external low. This is the major swing points that we're dealing with. So if price is to sell, continue selling, it should react up from this premium price of 70% and 79% Fibonacci level, and then sell off. All right, so what am I expecting to see to confirm a bullish move? This is what I'm expecting to see. Let's say this is the major high and this is the major low. I want to see price trade into premium. Let's say we have this high, we have this low. I want to see it trade into premium. All right, trade lower to a demand zone, a bullish order block, and then show an interest to continue going higher, and then breaks this high. So once we break that major high, we're looking forward to what is responsible to take that high, and that is the confluence of an inefficiency, an imbalance, and a demand zone or an order block, and that is when we not expect price to trade into that and then continue pushing higher. But in the case where we trade into premium and then we violated this demand zone right here, and price showed interest to continue going lower, like violating this other block, and then finally went down to break this swing low, all right, that external low, then that is when I would say, all right, this is still a bearish market. So these are the two scenarios, the two things that we need to look out for: a respect on the order block to kick out price reaction from premium level. So I've always explained this all the time. So that's what I'm looking forward into. Let it trade into the premium, show a reaction to trade lower, and I'm looking forward to look at this as an order block, because I can see that it's a very big body candle from our daily time frame, but not yet confirmed until we break this high, right? Trade into the equilibrium and trade into the premium, show a reaction to sell from that premium, and then we will have eyes on this demand zone, and once it showed a structural shift on the 4-hour time frame, then yeah, I'm targeting it to go higher, and we'll be targeting this high and this high also, because there's nothing there for price to react from again. Now if we go to the weekly time frame, you can actually see that the premium and discount that are labeled from the daily time frame is inside right here, this weekly inefficiency. And looking at the weekly inefficiency, this is the inefficiency that we have right here, the favor we get from the weekly time frame that we have right here, that will act as an opposition to this bullish move from this demand zone. All right, so you're looking forward to see how price will react from that opposition, which is the favorable gap, which is in line with that premium pricing that are labeled from the daily time frame using our Fibonacci. And these are just the things that I am looking forward into. All right, so these are the steps that I take to confirm a structural shift, and then to confirm where the market wants to go to. So let me look at what this swing high and low is. Let's see, that is actually previous month high and low. So this is the previous month high. All right, so like I said, looking forward for that structural printing, then that means we are going to be drawn to previous month high, and once we are drawn to that previous month high, we already have the next buy stop that we have at 126. So guys, let's pay attention to what I just explained, and we'll have eyes to look at this as another block. If it gets respected, then yeah, that means BTC has recovered and we start going higher. All right, so I strongly do believe, from what I'm seeing from the 12-month time frame, bullish. BTC is still a bullish market, and the sells, the dipping that we have been experiencing is just a pullback, a drawdown to mitigate an area of discount to start going higher. Okay, so remember I update this. So yeah, so an example is just like this one. We see we start out drawdown for straight, how many months? This is 3 months, 6 months, 9 months. For straight 9 months, it traded down into this inefficiency that we have right here. And if you could remember on my previous video, even on my Facebook page that I lost, I predicted this 2022, 2023. Okay, go through my YouTube, go through my old Facebook page. I predicted this, and I say we're targeting this high. We trade into that high. I also predicted this one also. So let's see how it goes. All right, so you always need to understand, you always need to have in mind that you cannot just expect market to just run like this. No, you need to see it trading to premium, discount, premium, discount. So you should be expecting a massive drawdown, so you should not actually panic. I guess the only time to panic is when you actually buy at a high and then you see your massive drawdown. All right, that's why you need to be a very strategic financial analyst. Like, you need to be strong with market analysis, and that is what I've been trying to showcase you guys right here. Trying to teach you guys right here. So yeah, that is just what I want to say. Nothing much. Yeah, so I released a new strategy on Udemy concerning swing trading, and I made mention of something very important, and that is setting your time frame to New York time. We'll be using the New York time for trade execution, and every lesson that you get, the last lesson is where you actually see how you get to use that strategy and setup. All right, and you can actually use that for your day trading. And example is this right here. Let's look at Euro USD and GBP USD. You can actually see that I have my previous week high and low, and this is for you to have a clear understanding that, you know, remember the Agranian range where you say you have a hunt on previous week high, then you should start selling to target previous week low. No, you just don't do that. You need to see a confirmation to that, and that is you having that structural shift to confirm that you need to go lower. For example, looking at GBP USD, I am not going to sell if you don't have hunt on previous week high. I'm not going to sell because I still have this swing low resting right here. So if you have to sell, you need to see that impulse move downwards to break that low, but we didn't have that structural break. So GBP is still maintaining that bullish move, including that of Euro USD. Now, how are we going to use the concept that I released on Udemy? Is that you have this time, your time frame set on New York time, and then you have to pay attention to Monday through open price. That is what we're going to use to project the weekly candlestick formation. And right here, I also made mention that you don't have to trade on Monday, because Monday is what we're going to be using as a structural bias to where we are anticipating price to go to. Now we're looking forward to start trading on Tuesday and Wednesday. Trade setup always show up on Tuesday and on Wednesday, and that is when we'll be having our trade entry, because on Thursday price is likely going to impulsively trade away, and you'll possibly not have a trade entry on Thursday. So you're getting in on time by being actively trading on Tuesday and Wednesday. You actually see a setup right there. So right here we have Monday opening price. You can actually see the markings right there, and we actually see that this is on a ranging market. We traded higher. Yes, we did sweep previous week low, and then price came back to the Monday opening price, right? But it didn't do anything interesting. It just slowed down. But you should understand that this is a ranging market. So we trade lower and we open on Tuesday. What Tuesday did was that it did a sweep on previous day's low. Okay, and we are still inside this area of demand from previous week. So this is not showing us to go bearish. You can actually see the movement it was doing right here. It was very, very slow. The sell wasn't that momentum, like wasn't that impulsive. So it is very, very slow. And now Tuesday open, you can also mark that Tuesday opening price. You're looking at Tuesday and you actually see what happened right here, that there was no structural shift or break of structure to go lower. This is just a range in market, and we finally have a clean setup right here where price trade higher, violating this area of order block and left a favorable gap right here, in which this reacting from right now. So from Wednesday, I'm looking forward to continue trading bullish on gold, and we are trading back into the opening price. So I'm anticipating Tuesday to maintain the low for the week. So another thing is that you can also backtest this. Let's look at Euro USD. I'm more preferred it on Euro USD than GBP USD. So Monday on Euro USD, we have the Monday opening price. We traded higher, took out previous week high. We traded back into Monday's what? Demand zone. This is the demand zone Monday left behind. Tuesday opened, we ranged, we trade into the demand zone, and New York trade continued to trade higher. This didn't show you a structural shift to go lower. It's still maintaining the bullish structure. You can also backtest it right here. All right, we have Monday. Where is Monday? Right here, we have the Monday opening price right here. All right, and we see how impulsively trade higher, kicking trading into the supply zone, which doesn't make sense to me, has a break of structure, but a sweep of this low right here. Monday opened, trade higher, then we trade back into the demand zone, we ranged inside there. And then Tuesday, let's go down to the 30 minutes. So Tuesday opened, and where is Tuesday opening price? This is Tuesday opening price right here. All right, and we traded higher, and when you trade high, what did it do? We have a structural shift right here, and we have this demand zone right here. Your trade entry should be on New York time from 8:30 9 a.m. We should be looking for trade setup to enter the market. If I activate my London New York session, you can actually see right here, look at the time frame right there. Sorry, the time, the blue is the London, the pink is the New York session, so more actively on New York than on London session. So you actually see the time, 8 o'clock. You see where the imports started, and where are we going to be drawn to? Previous week high. All right, so Tuesday, that happened on Tuesday. We trade higher. This is Wednesday, trade lower. All right, so low, high, low, high. We trade lower again into this Wednesday order block, and we close. Then this week started, and we actually see that. So where is it trying to go to? Looking at the daily time frame. Remember, I posted about Euro USD, and I made mention of this fair value gap, and it is quite interesting on how price respected that fair value gap. And now we are still looking forward to continue being bullish, because the higher time frame has not yet shown us that it wants to go lower. So that is just all I have to say. Or click on the description link and you see the link to the swing trading course on Udemy. I need you to go through it, study it, and master it a lot. All right, so see you guys next time. Take care and be safe, and we will always have eyes on Bitcoin. And yeah, let's see what happens. Okay, so see you guys next time. Take care and be safe.